Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Video on gold trading in the U.S. session. We had major red news on Tuesday. We had the CPI release at 8:30 a.m. New York time. And then Wednesday, today we had at 8:30 a.m. core, PPI, core retail sales, PPI, and Empire State Manufacturing, essentially all at 8:30. The reason why I want to show both of these trades is that they are the same trade exactly 2 days in a row. After the news, the timings, the 100 pip box, the 3 pushes into the high, the break in structure, the New York Open, and a vertical collapse for 50 pips plus. Yesterday on Tuesday, this trade was 75 plus pips, and then today we had a 50 pip blow off. Depending on where traders got filled, if they got filled at the 75 level, they may have had a starter in early, and then the New York Open started and went vertical from 50 straight through the low of the session. So coming back to our 15-minute charts, we won't talk about the overall, we can talk about big picture, the whole, day 1, day 2, day 3. Yesterday, essentially, we were an inside day. But it comes back to the fact that we have major red news on the calendar. We had not broken the previous day's high when we come into the U.S. session for the major red news. The reason why I'm hammering in on these trades is that regardless of what the market has done or what it's doing, the same things will apply. We had major red news, and so timings are critical. We can't do anything until after the news. We're in a 100 pip box. We'll just highlight this for traders. And then we have PPI. PPI went and pinned the low of the day, the low of the session, and went vertical. And I talked about this yesterday, the fact that whenever you see a large bull candle, and then we had an engulfment. So I can mark off the opening price of the high bull. You can mark off the wick, whatever you like. But essentially, again, we locked in a peak formation below double zeros, although we did not take out the high of the day. So in terms of an explosive major red news announcement, in order to have a first bounce or anything else, this would have had to have exploded vertically out as a bull candle and then gave a first bounce entry outside of the range or outside of the previous day's high or low, if that was indeed a 15-minute setup for a first bounce. Now, first hour, we've talked about this ad nauseum. First hour will put a high and a low in place. So whenever there's uncertainty, I will just sit and wait. But the key thing to understand is that they put in a potential high of day in place. Now, I've spoke about this before on major red news when they've engulfed right off the bat in the first 3 minutes. This now, we just had this 2 weeks ago, the exact same trade. They put in a peak formation. And then for the rest of the hour, they proceed to work back up into the high of the day in 1 push, 2 push, and a 3rd push that engulfs on a micro M structure. Now, I talked about this yesterday. No problem in terms of adding a starter. We're in the 100 pip box. We want to get into the market, if we're going to do that, somewhere with a starter in that upper part of the 100 pip box. Now remember, the timing of this is essential. We've just had major red news. We are now at the beginning of the second hour. We have 1 hour up that did not follow through. We're in a 100 pip box. If we're looking to sell in the top of the box, we will sell in that upper 25 pip area or above 75, depending on what the market gives us as an opportunity for selling high. So we have our break in structure. So after the major news, so the first thing, no follow through, I'm already thinking second hour trade. Second hour trade. We're in a 100 pip box again. We want to be looking at the possibility of selling high. We have our break in structure and the market pumps back up. We are 15 minutes now into the second hour. What is the next most important time frame that I will be looking at for entering this trade? Of course, the New York Open. We have 2 pushes back up into our peak formation micro M structure at the high of the day, and another break in structure in that second 15 minutes just prior to the New York Open, a lower high and a lower low We will repeat this over and over again. Lower high, lower low on the inside is the formula for a pump and dump. But remember, we're in the 100 pip box. I'm looking to sell above 75 if I am not in the market yet. We get our last 5 minutes heading into the New York Open and our engulfment of a 1, 2, 3 structure above the quarter level. Remember what's going to happen here. We got traders that have gone long after the news, perceiving this to follow through and continue the upward move. We have been in this trade, if we are in this market after the news, for almost 1 hour, and they've been up in profit over 25 pips, but the market has come back into their trade and they still can't go higher. We're making lower highs and lower lows. That is a weakening market for a short trade vertical collapse on the New York market open. So I know there are traders that don't like the 1 minute charts, and I talked about this yesterday. Look at the candles. All the candles lift above 50. All these buy candles lift above 50. They lift above 50. So if you're buying on a bull candle, all of your fills are above 50. It takes, bang, one candle to lock in all of these bulls. And this pullback, even the high of the pullback is still below all the closes of the bull candles. Do you understand what that means? That means they are trapped. So 25 to 50 pips minimum to the low of the day. We had 3 levels of rise. We're in a 100 pip box. We have a collapse now for a 75 plus pip vertical move through the low of the pin, which if traders chase that pin, we're forced to buy above the 50% level of the 100 pip box. This is the vertical collapse stop hunt into traders who chased the news or who the higher level longs were headed into the gap time in the low of the London session. So I want you to study this and understand how this works. 1 hour up, breaking structure, rolling over for the collapse. Pump, 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 dump. Easy money trade. Somebody asked, would you put size on this? Size is all relevant to your account. I would take a guaranteed or a high probability 90, 10, 25 pip trade with size over a 100 pip move off the low of the day or the high of the day that's counter trending a strong move just randomly that could eventually give me 100 pips after grinding slowly for 5 hours. So understand the importance of the move. It's the setup. I will short this with size and get out and take the money and be done in my 1 hour window and lock it in. Which brings us to today. We had a massive move today. Again, we had a false break low of the day. We've broken out of the high of the day. We've broken out of the high of the day heading into the U.S. window prior to PPI. We have PPI go vertical on the news and contrary to the previous day, continues to auction higher. Now, pay attention again. As I always say, I don't care how much the market's moved. On any given day, when a session starts, we are inside of a 100 pip box. Understand that, regardless if this has moved 500 pips already. I'm not looking at that. I'm looking at my 500 pip box. We have major red news that takes out the high of the day before the end of the hour. First hour puts a high and a low in place. First hour puts a high and a low in place. We're in a 100 pip box. If we're going to be selling, we want to be selling up in the upper portion of our 100 pip box if indeed a best trade setup presents. The second hour opens and begins to push back up into the high. One push, two pushes, and a third push before engulfing. So again, recognize the same pattern. We have a peak formation made after the news at the end of our first hour. Then we have 3 pushes back into the peak formation high before breaking down and giving us a break in structure on the inside heading into the New York Open. This bear candle down right here, I'll just highlight that, is our New York Open, which engulfs and gets traders chasing the long trade into our broken down market. So we already have a starter opportunity heading into the session just before the New York Open above 50. Some traders I know shorted it up just underneath the double zeros. We'll just zoom in on that. They took the engulfment up top into the peak formation on the third thrust. Other traders shorted it underneath the breakdown. Other traders shorted it on the pullback. So remember, if you're focused on the level, right, which is I focus on the level, which means that my max stop is going to be nowhere more than 20 pips, because if I'm wrong, they're going up back another quarter and maybe back through the high of the day. So we had opportunities on the pullbacks and then the engulfment on the New York Open to go back to get traders who are long. And you'll notice on the news, again, they lift it and look at the fill prices. Look at the fill prices in this 50 pip box between 50 and double zeros. All of the bull candles are filled above the quarter level, which means one candle wipes out all of them. So again, the question comes up, would you really size into this? It's the same trade. That's a 50 pip move. It's 75 pips from the right shoulder of the third thrust into the peak formation, into traders who have not taken off the money because they're not taking the money off because it's going to go 150 pips or a measured move. We're in a 100 pip box. We've gone 3 levels of rise. We've put a peak formation in, 3 pushes into the peak formation, a break in structure, the pump up, New York Open for the dump for an easy, low stress, 50 pips. The exact same trade, a subtle variation, the exact same trade as the previous day for an easy 50 plus pips on Tuesday and 50 pips locked and loaded. So some traders took off the bulk of their positions and then held. But when they come down a second time, after this consolidation under double zeros, your stop out would have to be at double zeros, because if this is going to collapse, the next candle should go through. So if you're trailing this, follow it down by the numbers, because that one candle, again, you'll notice the bear candles are caught as soon as it reverses. Same process applies on the upside. But after this trade, I'm done. That's it. I don't care what happens after that. I could care less if it goes back up, goes back down. It doesn't matter to me. That's my trade. New York Open, major red news, 3 levels of rise, pump, 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 break in structure, pump up, dump, done. That's the trade. Keep it simple. The same setup shows up over and over again. Now remember, whatever instrument you're trading, you're in a 100 pip box. I don't care if it's moved 500 pips on the day. It's still relevant when the session opens. Don't get in front of a freight train or a rocket ship, and don't try to catch a falling knife. Give the market time to set up. Let the news play out. And remember, everything is timed and measured. This second push into the peak formation starts in the second hour, 15 minutes. Second 15 minutes starts the move down. They break in structure. They pump it back up into the right shoulder. New York opens from 50 and goes vertical through the low of the session. Stay focused, traders. This is one of the repeating best trade setups that will show up in the session, especially on gold. But this same thing will happen again and again and again, especially when there's major red news on the calendar. 1% better every single day. Keep it simple, and may the markets go with you.